It all started out really good here today. Tesla stock on an absolute tear, up $29,000 on Tesla stock here today. Tesla having a huge day. And after that, it went a little south because I went into earnings after hours on Meta stock with 1,700 shares in the public account. And the stock got absolutely spanked. After hours, the stock crashing a massive 16.6%. After hours. You got to be flipping my flapjack. So the math on that is 1,700 shares times $82 a share down after hours. That's $139,000 down after hours. Oh my gosh. I saw this meme that made me at least laugh a little bit. It said Meta beats negative 10% plus. Tesla misses 10% plus up, right? And the guy's throwing away the Intelligent Investor book, which is a classic, great investing book, right? Oh, gotta love it. Then to add insult to injury, Chipotle, I got my Chipotle hedge, right? Which I've already been getting torn up on. And then of course, like everybody just freaking buys burritos like insane, and the stock goes up after hours on their earnings as well, okay? We got some things to speak about here today. What happened to Meta stock? Why is that stock crashing? I'm going to explain to you what's going on there, okay? Then we'll speak about insane bullish news that basically came out on the earnings call for another stock. This stock is not reflecting that insane bullish news yet, but I can tell you this is insanely bullish. So we'll speak about what stock that is, why it's so bullish for them. And then we'll talk about, is Meta stock a buy, right? Is this a buy, easy money buy, first thing in the morning, or not really, okay? So we'll speak about those three core subjects in today's video. And I also want to say my apologies for my behavior on the Twitch live stream today. I was out of control. I was cussing up a storm, especially when the Chipotle numbers came out specifically. And yeah, it was ugly, right? And then we had people trolling me. Some guy said, was trolling me about Meta stock, and he said I should be ashamed of my Meta stock loss after hours. And I said the only thing I'm ashamed of is sleeping with your mom. It was out of control, man. And so I do apologize for my crazy behavior on that one. I appreciate y'all joining me still. As always, smash a like, smash the subscribe button. And let's not smash our heads, okay? All right, guys, so let's talk about what the heck happened, why Meta stock crashed. Let me break this down for you, okay? So first up here, very important to understand, the numbers were about as great could be. The revenue was up 27% year over year. The income from operations was up 91% year over year. The operating margin increased to 38% versus 25% in the same quarter last year. Insane. Net income was up 117% for the company on a year-over-year basis, and diluted EPS was up 114% year-over-year for the company. Let me be very, 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 very clear. The numbers were extraordinary. Mark Zuckerberg right here, he says it's been a good start to the year. The new version of Meta AI in Llama 3 is another step toward building the world's leading AI. We are seeing healthy growth across our apps, and we continue making steady progress building the metaverse as well. Now, we look a little deeper here. This is all great. Family daily active people, so this is somebody using at least one of Meta's apps each day. 3.24 billion, that increased 7% year over year. I still know how they grow that number. I'm like, geez, they're not gonna be satisfied till literally every single human on the planet uses at least one of their apps. It's insane. Ad impressions were up 20% year over year. Ad price per ad was up 6% year over year. Revenue, once again, was up 27% year over year. They kept costs and expenses in check in a massive way, only up 6% year over year. CapEx was kind of what you expect of CapEx to be for this past quarter. They also repurchased over $14 billion worth of stock, and then they paid their first dividend only, which I definitely enjoyed. Cash and cash equivalents, marketable securities, $58 billion. Free cash flow was over $12.5 billion. And headcount actually dropped for the company 10% year over year. So up until this point, we're still wondering, why is Meta stock down? Because these numbers look flipping flapjacking incredible. Here's where things went bad, if we can really call it that. So this is what Wall Street didn't like. The guidance. They did not put a guide out there that was above Wall Street consensus. The midpoint of the guide was about $500 million, roughly, lower than where Wall Street was at. So Wall Street does not like that, okay? Additionally, Zuckerberg says we expect, or it's actually the CFO talking here, it says we expect full year 2024 total expenses to be in the range of $96 to $99 billion, updated from our prior outlook of $94 to $99 billion. So now they're going to the upper range, right, of what they expect total expenses to be for this year, due to higher infrastructure and legal costs. For Reality Labs, we continue to expect operating losses to increase meaningfully year over year due to our ongoing product development efforts and our investments in the further scale of the ecosystem. They don't like that either. Wall Street doesn't like Reality Labs at all. They wish that business just went by. Like, it literally, if Zuckerberg said we're getting out of Reality Labs and stopping the metaverse, I think the stock would be up 25 to 35% the next day. I kid you not. That's how bad Wall Street really hates that division. And it does burn a massive amount of money. We do hope to see the payoff over this next, decade, 2 decades. But for now, they don't like it. We anticipate our full year 2024 CapEx, capital expenditures, will be in the range of 35 to 40 billion, increased from our prior range of $30 to $37 billion as we continue to accelerate our infrastructure investments to support our artificial intelligence roadmap. While we are not providing guidance for years beyond 2024, we expect capital expenditures will continue to increase next year as we invest aggressively to support our ambitious AI research and product development efforts. So, this is where things went south, right? You first off, the guide being just slightly below where analysts are at. I think the stock could have got past that. I don't think that's why the stock's down big. That's just like, just kind of a little bit of cold water on the next quarter. The real reason the stock is down is all about expenses. And Wall Street really loved it when Zuckerberg was focused on efficiency and when he, to what Wall Street standards were, really keeping CapEx in line. But now Wall Street's really worried about Zuckerberg's going to go crazy with spend again. And so therefore, they are not very happy with what they're seeing here when we're talking about CapEx expenses above or at higher ranges than where they were at, right? Now, to be very crystal clear about this, the income statement's an A+. I mean, it's as good as it gets. That's literally as good as it gets for an income statement right now. Absolutely phenomenal, right? Now, back to this whole Meta Tesla situation, right? Tesla net income down 50% plus year over year. Stock goes booming. Meta net income up over 100% year over year. Stock down massively, right? Tesla revenues negative. Meta revenues insanely positive at 27%. And yet the stock's moving opposite directions. It's a very frustrating thing for people. I understand. It's the game of Wall Street. The game of Wall Street, and I talk about these things and I mention these terms all the time in videos just casually because I've been doing this for so long, but this game of Wall Street, priced in, set up, beat expectations, missed expectations, weak guidance, strong guidance. All these words in this whole game of Wall Street, it doesn't really matter for long-term investors, but for traders, they play this game. It's a game of back and forth of like, oh, did the company miss their expectations? Oh, that stock had fallen so much into earnings, so even though the bad news came out, it wasn't so bad that the stock actually went up, right? That could be like a Tesla situation. Or stock ran so much into the earnings that even if they reported great numbers, the stock couldn't go up. It's all this back and forth, the game of Wall Street. As an investor in the market, you just got to understand the game of Wall Street does not mean your stock did bad or good. The income statement is whether your stock did bad or good, okay? Not the stock price reaction from the game of Wall Street. The bottom line is, if we were judging off of income statements, actual financial statements that actually matter, Meta stock would be up 15-20% after hours. They just reported as good of an income statement as you can possibly report, with as good of a balance sheet as you can possibly report, right? With also very strong guidance. Was it the midpoint was slightly off versus what analysts were at? Sure, but the growth is still there. Even if you take those numbers, you're talking about maybe 16 to 19% revenue growth year over year. That's phenomenal. And you would say the bottom line is going to grow at a much faster clip than 16 to 19%. So it's just a little food for thought in regards to that, okay? Now, there's some insane bullish news for another stock that happened on that conference call. Okay, insane bullish news. And we'll speak about that right now, what stock that is, and we'll get into if Meta's a buy and talk about if that's easy money from here in the morning, okay? So that stock is NVIDIA. NVIDIA, buy. Here's the deal when it comes to NVIDIA, okay? Last night, Elon Musk, one of the richest people in the world, or you actually might still be the richest person in the world, right, or somewhere up there, one of the most powerful people in the world, he's talking up NVIDIA left and right? Talking about 35,000 H100 chips. He's hoping to get to 85,000 by the end of the year. It doesn't look like Tesla's going to stop spending with NVIDIA chips anytime soon, just to be quite frank. That could be years. He's talking about they're trying to use them as efficiently as possible. And then tonight, Zuckerberg on the conference call, right? He talks about years of big infrastructure spend for AI. If you're talking about infrastructure spend years ahead, it all circles back to one company. And that company is NVIDIA. This means that Meta is going to be spending even more money than they thought they were going to at the end of the day, they're buying NVIDIA chips. And so when you think about this just practically, NVIDIA is just very well positioned for the next several years. Years, not months, years, not quarters, years. Because Meta is going to be spending like a drunken sailor for years to go in the future on this. Tesla's going to. You think Amazon's not? Of course Amazon's going to, right? You know Google McDougal's going to. You know Microsoft's going to, with obviously what they're doing with OpenAI. I mean, OpenAI, Sam Altman, he wants to build chip factories, and he knows how much NVIDIA is going to make off this situation. Oracle, all these companies, right? All these companies want to get their hands on as many NVIDIA chips as possible. So it all circles back to NVIDIA in this several-year bull cycle for NVIDIA. And the best thing about NVIDIA is it's not like that stock's trading at a rich valuation. It's not like it's at some crazy 150 forward P. If that was a situation, you might say, ooh, okay. No. It's trading at in the 30s right now. So that, to me, was everything. Because the overall worry about NVIDIA is, well, things are great right now, but maybe business slows. All these big dog customers have no choice but to continue to buy these NVIDIA chips. You can't get them anywhere else. That's just the bottom line with that, okay? Next up here, let's talk about if Meta stock is a buy in the morning, okay? Let's call it an easy money buy in the morning. So here's the deal with Meta, right? You have an A+ business model. We're talking about when you own Facebook, Instagram, WhatsApp, Facebook Messenger, and you have the VR's kind of cake on top. You own Llama 3, right? Probably the open source model of AI in the future. You've got your own AI products that you're testing. And Zuckerberg said on the call, he believes Meta is leading AI against every company. Against every company, he said. Okay? And he's not really the type to just make statements to make statements. I can tell you that. As somebody that's watched him and listened to him over the past 15 plus years, he's not one of those guys. So for him to say that, he's really got to feel 100% confident that Meta absolutely is the leader in AI, right? So you get all these incredible business models that almost everybody would want their hands on. You've got an A+ income statement with this company, an A+ balance sheet with this company, right? You've got an A+ long-term opportunity. Facebook continues to just be a great cash cow. Instagram continues to grow and be another tremendous cash cow. And Instagram still has a lot more monetization ahead, by the way. People forget, it was only a few years ago, monetization really started to come into Instagram in a major way. WhatsApp is still at the infant stages of monetization. So WhatsApp's like a 10 plus year monetization opportunity ahead, right? And then Metaverse is out there, AI opportunities out there. Those are kind of more longer term matters for the business, right? So the long-term opportunity is incredible at this company. You've got an A+ CEO. If you look at the Mag 7, how many of those companies are really founder-led at this point in time? Apple's not, right? Microsoft's not. And respect to Tim Cook, respect to Satya Nadella, those guys are awesome. But I'm just saying, these aren't the founders, right? So you don't have it at Apple, you don't have it at Microsoft, you don't have it at Amazon, right? Andy Jassy, phenomenal, but he's not Jeff Bezos. You do have it at NVIDIA, right, with Jensen there. You do have it at Tesla, even though Elon Musk wasn't technically the founder of the company. He's basically the one that's architected this whole thing together, right? So you could count in, Tesla as have done that. Google doesn't. Meta does, right? So where do you want to put your chips on the table, right? I mean, I feel pretty darn good about being in a position to put my chips on the table with companies like the Teslas, the Metas, the Nvidias, these sorts of companies that have the leadership there that has gotten them to this place. That is absolutely amazing, right? In respect to Andy Jassy, I'm obviously a big Amazon shareholder. He's really the architect who really built AWS into what it is today, right? Which is just a huge component. So in Meta, back to Meta, we got an A+ CEO here. So the next question is valuation. Is valuation make sense tomorrow to be a buyer of this stock, right? Well, when we look at Meta overall here, forward P on the stock, looking at 1000xstocks.com, wait list now is like, I think 270. I think there's 270 people on the wait list. So if you want to join the wait list, get on that tonight. 1000xstocks.com. We have monthly memberships and yearly memberships for that. I think we let 4 people in yesterday. For Meta, 20, we can call it about a 24 forward PE roughly. Many stocks trade at 18 to 26. So we're kind of in that middle-ish range of where you'd want to be at there. So that doesn't necessarily tell you you're undervalued, right? It kind of tells you you're kind of in where you should be, but you got to factor in growth, right? Growth is very important. If we look at current year expected revenue growth, well, we're talking about 24% roughly. That's about 4x where the average stock usually reports their revenue growth rate. Next year, about 14% revenue growth expected for Meta, right? Which we can call 2 to 3x where average stocks are expected to grow. So we got a company trading roughly in line with a pretty regular market valuation, but the growth rates of this company are nothing regular. They're way above normal, massively above normal. It's not even remotely close, right? I mean, there's going to be a lot of companies this earnings season that will not grow their business, or if they do, it's a few percent, and then Meta just grew at 27% clip. So when you look at it from that context, Meta looks extremely undervalued here. We're not even talking about the long-term 5, 10, 15-year opportunity. We're just talking on the short term. In the very short term, like the next year, Meta looks insanely undervalued. So the next thing you want to do is you want to compare these stocks versus their peers, right? And so that's why I have the compare feature on 1000X, because I want to compare these stocks versus each other and kind of see where they're trading at, right? So I'm going to compare Meta versus who? Google and Amazon. You know why? Well, Google is another advertising giant and Amazon's a third advertising giant. Meta, Google, and Amazon are the advertising market. They are the 3 big dogs, right? And if we take a peek here, right, and keep in mind if Meta's down huge tomorrow, the forward P is going to be lower than Google and Amazon. We don't have it where after hours is reflected. It will reflect tomorrow, right, on the open. So we have a situation here where Meta's likely trading at a forward P lower right now, if you factor in after hours trading, than Google and Amazon. Yet, Meta's going to way outgrow revenue growth, either of those companies, and probably profit growth as well, net income growth as well. And, I like Google, good company. I like Amazon, I'm a big shareholder. But at the end of the day, the steal deal is Meta, if you're going to compare these 3 companies versus each other, right? And so, looks pretty darn undervalued to me, right? Next thing to keep in mind is every dip is a buy when it comes to Meta stock. It's always been like that since this company went public. It continues to be like that to this day. Every dip's a buy in this one. If you've ever bought dips on Meta stock, you've likely been very, very happy you've done that, right? And I think this dip will be no different. I think it'll be short-term in nature, right? One thing I do worry about in regards to Meta is the next time we have an actual real recession, because in that situation, obviously, spend pulls back, those sorts of things. And that could hurt Meta's business model because they are so massive nowadays, right? But the fear of that is a fear of every company. Like, there's pretty much no stock you wouldn't be fearful of if you had a legit recession, right? So that's just a little food for thought in regards to that. But every dip's always a buy with this stock. It's always been like that. I still remember when this company went public and the stock fell 50% in its first few months. The thing about Meta is Wall Street owns it because they have to own it. Because the company is so big and dominant, they have no choice. But let me let you guys in on a little intel, a little secret, okay? Wall Street really doesn't understand Meta. They never have. From the day this company went public, before they went public, they never understood it. When the company went public, you know what I heard when I would turn on CNBC and watch these Wall Streeters talk about it? How are they going to make money? What makes them not the next MySpace? They had these very, very, very simple questions that they didn't even have a clue to about how do they make money? Well, why would somebody pay to do this or do that? Or and looking back now, it's just very naive, right? We were just like, are you serious? But I'm dead serious. When that was the talk back in the day, you turn on Bloomberg, CNBC, you'd watch the Wall Streeters try to talk about this, and folks in general, they didn't understand, how are they going to make money? How are they not going to be MySpace? Because MySpace was big and then they went under. And so that became the big thing, right? They never understood it. And to this day, they still don't understand it. And that's why the stock went down 50% after the IPO. They didn't get it. They were how does this work? And they still don't get it to this day. When Zuckerberg's out there talking about what they're up to in AI, when he's talking about Llama 3, they don't understand what's going on. Wall Street's not built like that. This isn't what they do. Wall Street collects a bunch of fees off very wealthy people. And so their game is totally different. Do you think their business model is baked upon understanding highly advanced AI models? No, of course not. And they really don't need to. They play the game of Wall Street, which is kind of let's try to keep up with the market. If we underperform it a little bit, okay. If we overperform it a little bit, okay. Let's just make sure our billionaire clients and our $100 million clients and our institutional clients just stay with us, right? That's the name of that game for them. And then they play the little game back and forth of Wall Street of did the company beat expectations? Did they miss? Was the guide there? Was everything priced in going in? So you just got to understand that, man. It's a different game they're playing than what we play. The average Joes out here, whether you've got millions of dollars in your portfolio or whether you got hundreds of dollars or thousands of dollars, they're playing a different game, okay? We're investing our own money. Our own money's on the line. All these Wall Streeters, the far majority of money they invest is not their own money. It's other people's money. So people like me and you, we're playing a different game, okay? You just got to understand that. And you got to let them do them. And do whatever, I don't want to say clownery, but do their little show. That's whatever they do, okay? What we do is just a different thing. When you're talking about building out an investment account, that's with your own money. You think differently. You act differently, right? And the thing you don't want to get caught into is playing their game because guess what? You're not getting the fees. You're not getting the 20% on the profits. You're not getting the 2% back end fee. You're not getting any of that, okay? So you don't want to play their game because that's a lost cause. Now, in terms of playing the game, right? I will say, because of this particular price action, it sets up Google and Microsoft actually pretty well because these stocks will be down likely heavily tomorrow. The question is how heavily. Google stock down big after hours. I've seen it down 3.5% or so, right? They didn't even report earnings. It's just if Meta's going down big, Google gets pulled down with it. Same thing if Meta goes blasting off, it pulls Google up as well, right? Same thing with Microsoft. So these two set up pretty darn well for after hours tomorrow because they report. Now, am I going to play, call options on these stocks tomorrow? No. But I will say that the setup there is pretty good if you want to think about the whole game of Wall Street there. And because now everybody is going to be fearful. Oh, Microsoft, Google earnings, maybe they're not going to be good. I don't know, even though Meta's earnings were absolutely A+. Just people run with all these conclusions. So maybe they sell off heavier. Oh, Meta couldn't go up, so maybe Google's not going to go up. Maybe we got softening ad market. Maybe this, maybe that. You just run with kind of fear. And then if you come in as not that fearful, then all of a sudden you can go up 3, 4, 5%, something like that, right? So we'll see how all that shakes out. I will say just the setup is easier for those companies now at this point in time. Now, it's interesting because I got obviously really upset on the live stream. I was cussing like crazy and whatnot, right? And, you might say, why does it even matter? Chipotle is such a small money hedge. So stock goes up and, what's it going to affect me? $1,000, couple $1,000 is nothing in the grand scheme of things, right? And I'll put it to you kind of like this. And here's kind of my view, and this is maybe a little bit of a bigger view of me and when it comes to money and in these sorts of subjects, right? it's always been way more than about just the money with me, right? The money is just a scorecard, is the best way I can put it, right? No different than the 6-figure trophies and the 7-figure trophies. It's an award. It's cool, but it's kind of just like a scoreboard material. Like, right, I got the 4 silver play buttons from YouTube, right? Probably have a 5th maybe next year for the reaction channel. Maybe someday on this channel, the main channel, maybe we got a gold button there, right? And all this stuff is really scoreboard material, just like the money is just really scoreboard material, right? At the end of the day, like, there's no like new car I want. Like, I already have an S and I got a Model S Plaid. Is there really like, no, there's not. Is there a bigger house I want? Not really. Maybe someday, but not right now. Like, I'm good. Like, we got all the space we need, right? The money's it's just a scoreboard. That's all it is. And so when I get mad, it's never about, oh, I'm mad because I lost money or money went down. No, it's because I lost. It's like, I love it. I love the competition of that. I love the competition of, like, winning. And every single time I do anything in the market, I want to win. I want to make money. If I buy a stock, I want to make money 100% of the time, even though that's never going to happen, right? It's never going to happen. But that's what I want to have happen. I want to make money every time. If I hedge, I want to make money every time. Is that realistic? Heck no. But sometimes you get mad when you take a loss. And I felt like that in regards to the Chipotle situation, where I looked at that one and I'm like, I think I lost, right? And I don't like the feeling of losing. I like to win. I don't put in all the work to lose. I put in all the work to win, right? And so I'll never bat 100%, and that's fine. I got to win a lot more than I lose, right? And in the competitive nature of this game and of this beast, the name of the game is just you win more than you lose, right? So I want to win every single time, but at the end of the day, even if I'm batting 70% or 80%, it's so much money, it's ridiculous. So that's just a little like food for thought. Now, some people don't even want to play the game, right? They would rather take their ball and go home than play the game. No, that might be you. I don't know. Like certain people are like that. They feel worse about losing than they feel good about winning, right? And therefore, they cannot take it, a loss. I can. I might get mad about it, but I'll just keep it going, right? I love the competitive nature, and you have to, if you want to, I don't know what else the way to put it. If you ever want to be really successful financially, like really, really like baller, you better get competitive. You better start competing. I tell you, I did not get to this place without being super competitive. I'm competitive in everything I do. I want to be the best. I want to be the best investor ever. I want to be the best stock market YouTuber ever. I want to be the best at all this stuff. I want to have the most play buttons, the most money, the richest, all that stuff. And so when I go to think, it's about the competition and it's about winning. And to me, that's fun, right? And when I lose, it's not fun. But you got to get past that hurdle of like, I'm going to lose. In entrepreneurship, right? You better get used to losing because you're going to lose. You're going to lose a lot. Ask anybody that's ever been a successful entrepreneur. They will all tell you, you're going to lose. You want to be a successful investor? You better get used to losing because you're going to lose a lot. Think about it. Even if you're right 70% of the time on stocks and you're wrong 30% is still a lot of times you're going to be wrong. Imagine that over a course of a decade, over 2 decades, over 3 decades, right? Let's say you're right 80% of the time and 20% of the time you're wrong. Still a lot of times you're wrong. Still a lot of times you fail. Same thing with entrepreneurship or anything in this game. And so I just think that's really important that everybody understands that because, you can't get to the higher levels without doing that stuff. Without being super competitive with yourself or with others. Some people, it's more about competition with others in general, right? Sometimes it's more about competition with yourself. For me personally, most of the time, it's about competing with myself. Sometimes it's about competing with others, but most of the time it's about competing with myself. And so it's about trying to be the best me I can be and making sure I outshine whatever my last whatever was, right? I want there to be a day when ELF is not my best investment. That would be epic for me. If I make 2,000+% on ELF, I want someday there to be a stock that made 10,000% on, 5,000%, right? if I get a return of 70% in a year, I want there to be some year in the future where I get more than a 70% return, right? I want to beat that year of 2023 or whatever year in the future. So, these are just some kind of words of wisdom coming from me that I think you can apply to your own life. And sometimes you're going to get mad, and sometimes you're going to take a loss, and you're going to be disappointed with yourself. But at the end of the day, you got to keep it moving, and you got to just make sure you win a lot more than you lose. And when you win big, right? Meta, yeah, it sucks. Tomorrow's going to be down huge, but we'll still be up like $500,000 in the public count on that. Much love as always. Appreciate you guys joining me. 1000xstocks.com if you're looking to join the wait list. And have a great day.